We have another transaction for sales on November 20. The business make credit sales for 250 units at $100 each. The total revenue is 25,000. In this transaction, we will report the sales. Then we will report the cost of goods sold. We said that this is credit sales. That means it will be account receivable account. We put the description for this transaction. Then we put the amount on debit, 25,000. Then we report the credit. Use the account sales revenue on credit, the same description and the same amount. So we have done for the first transaction. We can check the financial statement. You see our net sales increased, and you see that we have gross margin at 64%, which is very high. The reason behind is that we haven't yet booked the cost of goods sold for these sales. So here we need to report the cost of goods sold. To calculate that, we need to go to the tracking, inventory tracking. So we have stock out for 250, that's correct. And we get the value for the price for stock out at 54. We get it from the weighted average cost that we already calculated. And we get the value for the cost of goods sold of 13,563. This is the amount that will be shown in the cost of goods sold. The total available stock is 600 with a total value of 32,550. We go to journals. We put the value here. Then we start our transaction. So we said this is the date. The account should be direct cost. And we use the same description. Then we put the value for the amount of the cost of goods sold, which is 13,563. Put the credit line, which is inventory. We said this is 1,200. We will reduce our inventory. Then we put the description. Then we put the same value on credit. So we said that it should be our inventory. Now it should be 32,550. Let's check in the financial statement. Yeah, it's the same value, 32,550. Then in the income statement, you see that the gross margin now is 39%. It's not 64 as it was before, because we have reported the cost of goods sold, and we get net income for the company at the value of 20,550 with a net income of 39%. So there are some movement we haven't yet booked, which is related to operation expenses.